Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati, and the rupee crosses rupees 80 to the dollar, the lowest on record, and is there more to go? With wholesale price inflation at 15.18% for the month of June, it looks highly unlikely that inflation is going to come down at the retail side. Just before that, the best bonds to invest in is curated in our Quick Invest by INR Bonds app with the most information, transparency, our own proprietary risk score that helps you avoid all kinds of credit risk in this market where credit risk is getting higher. So download the app now on iOS and Android, check the best bonds to invest in, and just straight to in-app investment process.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR bonds. Download the INR bonds app to save better.
Coming back to bond bites, the rupee at rupees 80 and the wholesale price inflation at 15.18% is not at all good for the markets and the economy. Sensex and Nifty in a volatile trade were up and down. The rupee, as I said, closed down, and the Gsec yields were steady at 7.39%. And in corporate bond space, Piramal Enterprises issues 2-year MLD at 8%. MLDs are market-linked debentures that has found a lot of favor with ultra-high net worth individuals. But coming back to the rupee and the wholesale price inflation, the wholesale price inflation at 15.18%, while the retail CPI is at 7%. Now, here the question is that if the wholesale price inflation is at double the retail, that means the manufacturers and the producers are not able to pass on the prices to the consumers. So what's going to happen is the margins are going to drop substantially. And if margins drop substantially, and with even higher, weaker retail inflation and rupee that is at its record lows, our cost of imported goods also is climbing up. So you'll have all the manufacturers of goods and services who are contracting on margins. They will also start to contract on volumes. And this is going to take an impact on their equity prices. So the Nifty, in the Sensex and Nifty are not going to do very well in this scenario. And if Sensex and Nifty are not doing very well, then there will not capital will flow out of equities and the rupee will fall further. So this is a never-ending cycle, and RBI has to do something very quickly to bring down the prices in the economy, and that is hectic rate hikes. The Fed is looking to raise rates by at least 100 basis points next week, given US inflation is at 9.1%. So expect very high, more rate cuts from RBI. And if RBI does not hike rates, then there is a danger of more falls in the market. Thank you very much for listening in. And do not forget to subscribe to your YouTube channel if not done so already.